All right, so I wanted to share with you my next best option swing trade. In terms of my latest one on the channel, it was swing trading cliff call options. As I had stated in this video, I'm setting a $22 price prediction before my expiration of October 15th. That price prediction has hit at $22 now, and those call options exploded. I ended up buying the $21 strike. As you know, the October 15th $21 strike, and I ended up buying these at around 70 cents. They hit $1.20 today, and they're currently sitting at $1. I made a 40% profit return swing trading those options. So in terms of our next play, it is going to be on AFRM stock, AFRM. I ended up buying put options. As you know, if you've been following the channel in terms of the community tab, I've been sending out some free alerts for a limited time only. With that being said, this stock is set to crash, guys. I ended up buying these put options when the price was trading at $140 later into last week. I am currently profiting as these are about to be in the money, but let's get into it. So in terms of the contracts that I went with the October 22nd 135 strike. These contracts right here, currently sitting at, $7.70. With that being said, this can realistically crash to $110 before those expire, which is on October 22nd. So here's what I'm looking at. Here's the technical strategy. Here's why I'm expecting this stock to crash, right? So for the long term, I think this is a great company. I think it's going to do well for the long term. For the short term, I think it's extremely overbought. I think we're due for some correction, and I think we're really going to start to see a crash, right? So like realistically, this could bounce back to 145. This could see a new all-time high towards 150s, but for the short term, I think the highest we're going to be able to get back to is like 145 to an all-time high fake out at around 150, and then from there I think it's pretty much for the short term nothing but downhill into the low 100s, looking at around 110 120. Lowest I could really see going for the short term would be $100 a share. But the point being is, looking at this chart, you have huge downside potential for the short to midterm. For some examples, you can see right here it tops out at $138, and then it quickly crashes, just about almost 2 weeks. Within 2 weeks, it drops to $97. And then right here, $147, just in 2 weeks, it crashes into the 90s, right? So you see what I'm talking about. You see the resistance levels forming in this key range of $138 to $145. That's what we'll call that key range. Now, in terms of the strategy that I'm using is called a gap close reversal to fill the gap below. So in terms of gap close reversals, what you need to understand is what stocks is. Stocks like to fill gaps. They like to close gaps. That's what these blue lines represent. These previous closing prices, these gaps, right? So in terms of right here, there's a gap that has been filled at $140. This gap right here at $140 has officially filled. So when stocks fill their gaps, they can have reversals, and they're most likely to have those reversals at their key overbought gap fill levels, the highest ones waiting to fill above, and then the lowest ones waiting to fill below. So the lowest ones waiting to fill below, you got one right here at 68, you got one right here at 92, and then you have another one right here at 100. In terms of the highest ones waiting to fill above, right here, and it is officially filled at $140. So what I'm doing is I'm understanding that, okay, this stock has now filled the gap, and how is it reacting since it filled that gap? It's been reacting as a key fake out resistance level. History shows it's also a major resistance level with huge downside potential for the short to midterm. And right now, it's having its first red day, going from, green to red on the day, forming this bearish candlestick, which is very, very bearish for the short term, being at this key resistance level. You can see how the stock reacts when it forms these bearish candlesticks towards key resistance levels. What does it do? Same candlesticks that form right here, topped out at 133, quickly went to 106, guys, right? And the volume is extremely high. So this is going to really potentially push this stock back into this low $100 range. And you have this gap that's waiting to fill below, all the way down here at around $100, right? So that's what I'm looking at. That's the particular strategy. It's called a gap close reversal to fill the gap above. We're looking for those key overbought stocks, when buying put options, their highest gaps waiting to fill above right here. Like there's no better opportunity that I've seen for the short term. This is exactly what I'm looking for. The highest gaps waiting to fill above. Once it fills its highest gap waiting to fill above, it gets crushed. right? Has that gap close reversal, then it starts to fill the gap waiting to fill below. As you can see right here, you have a gap waiting to fill below in the low 100s. Let's get into that here real quick. This would be like the lowest I could see it going for the short-term being, which would be a key entry to get out, and then to potentially go long if you see a bullish reaction right here. The gap to fill below at $108. That's where I see this heading for the short term. Is it going to take time? Yes. How long do I think it's going to take? 1 to 2 weeks. For the short term, it's not looking good. This is a great swing trade where you just kind of passively hold it like we did with Cliff. Looks like a phenomenal opportunity to play that gap that's waiting to fill below. And then once that gap fills below, we look for a potential buying opportunity. If it reacts as resistance, look for a potential put opportunity. This is going to be a phenomenal stock to swing trade, guys. I'm telling you, I would not miss out on this one. It looks phenomenal. This, like the chart, you can't get better than this. And you see how it reacts when it forms these bearish red candlesticks at its key resistance levels, it sells off. And in terms of the chart pattern, you have the gap close reversal to fill the gap below. This looks absolutely perfect. You know, remember last time when ATR filled those gaps, you had one of its highest gaps waiting to fill above right here at 1870, fills the gaps, then it has a massive crash. Well, in terms of AFRM, obviously the crash isn't going to be as big, but it's the same pattern. The highest gap that is waiting to fill above at 140 is filled. How has it been reacting since it filled that gap? Nothing but fake outs and closing lower than $140 a share. And now you're finally starting to have that pattern where, you know, this isn't breaking out. It's not closing strong and it just turned green to red. Like this looks really, really bearish. And in terms of where we're heading, we're going to see something similar to this. We're going to see something similar to this, similar to this, similar to this. So I showed you how it reacts. I showed you the pattern. I showed you the basics, the strategy. This has been my thought process on AFRM stock. In terms of the put options, we're aiming for 100% plus. If you did want to do some YOLOs, obviously do not go big on these. But if you wanted to do like more of a YOLO option trade, you can look into going much further out of the money. So like with options, I prefer to stay in the money. With these, I only went 5 points out of the money. If you did want to do a YOLO, this is something you could look into. You can look into some put options that expire, you know, I would go with October 22nd. And then you can look where the volume is on the puts. You can look into the lower 100s, like 110, 115, 120 contracts ranging from like $2 to $1. You can look into those as well. But yeah, either way, I think that crash is really going to start to occur. I'm just playing it safe and giving myself more time by getting October 22nd. So yeah, that's my thoughts on AFRM stock. The current price target is going to be sitting at around 110.